Hello traders, welcome back to the Forex Geek where we dive deep into the tool that can help you make smarter trading decisions. And in today's video, we are going to be talking about the speed resistance line, a powerful technical analysis tool that can enhance your ability to predict market movements and identify key entries and exit points. So by the end of this video, you will have a clear understanding of why the speed resistance line are what the speed resistance lines are, how they are constructed, and most importantly, how to incorporate them into your trading routine to maximize your profits. So let's get started and explore how this tool can help you navigate the markets with greater confidence. We start by understanding what the speed resistance line are, and they are technical analysis tools designed to help traders identify potential support and resistance levels in financial markets. These are what the lines does. These lines are based on the ideas that price trends often retrace specific fractions of their movement within time. This is basically what it's all about. Remember, a key consideration when making use of the speed resistant line is important to remember that they require subjective judgment in selecting anchor points and interpret price interaction. Additionally, false breakouts can occur, so traders should wait for confirmation before making trading decisions based on these lines. So we'll dive straight into a trading strategy that you can use when mastering the speed resistance line. So the first step we need to do is we begin by identifying a clear uptrend or downtrend, and as we can see, this is a clear uptrend because the market is making a series of higher highs and higher lows. This is a clear uptrend when market broke structure, and we can see in this area this was a higher low and this was a higher high. So we are in a clear bullish trend. So once you have observed your structure, it is crucial because the speed resistance line are most effective when applied to an established trend. You have to look for significant peaks and lows to define your trend direction. Once you have defined your trend direction, the next step you would want to use is you identify your trend, then you draw your speed resistance line, and this is the speed resistance line. This is the tool we'll be making use of. So when you click it, you connect the low to the high in an uptrend. If it's in an uptrend, you connect the low to the high. This is how we make use of this tool. When you connect the low to your high, this helps you in an uptrend. Then in a downtrend, you have to connect the high to the low. Ensure that 1/3 or 2/3 lines are automatically drawn. As you can see, these are the lines that are automatically drawn. These lines will project horizontally across the chart, indicating potential support and resistance level on the chart. So this is basically what you will need on your chart. The step 3 is to wait for price to interact with these levels. You monitor how price interacts with these levels. You look for a bounce or break of these levels. A bounce off a speed line can indicate continuation in a trend, while a break through this level can signal a reversal. So wait for a bounce, and as we can see, this is a bounce on this 0.5 level. This is a bounce. There is also a bounce in this level. So these are the bounce we are waiting for to establish our continuation trend. For a long position in an uptrend, you will consider entering when the price bounce off 2/3 or 2/3 of the line, and we can see this is above the 2/3, signifying that this is an area we can look for bounce. And at that area, you would have to look for a bullish candlestick confirmation. You can see a bullish engulfing in this area. We can see a bullish hammer in this area. You can see another hammer here. These are the confirmations that we need before taking a position. So once you have confirmed, you would enter your entry, you enter your long position when you have confirmed your candlestick pattern. Remember, your stop loss placement is really crucial. You just need to set your stop loss below the next speed line for a long trade. Below the next speed line, this is where you set your stop loss. Then you can decide to exit your trade. You exit your trade when you market is showing signs of reversal. Once you notice a sign of reversal, probably a bearish candlestick pattern, or when price closes below the speed line, this will be where you would want to exit your trade. Your stop loss should be placed below the low, below the previous speed line. This allows you for some price fluctuation while protecting your position from significant losses. This is basically how we can make use of this strategy in a buying scenario. Now let's look for a selling opportunity to make use of this indicator. And as we can see, remember, in a selling opportunity, you find the direction of your trend. And as you can see, market is trending from up to down, lower lows, lower highs, lower lows, lower highs, before you make a sustainable lower low. So after we establish this trend, we would draw our indicator from high to the low. In terms of a downtrend, is from the high to the low. Once you have established that fact, we would have to spot our reversal. We will spot our reversal candlestick pattern on this area, on the 2/3 to the 2/3 of these areas that our horizontal line has been projected to. So these are the areas where we would look for our bearish candlestick pattern during the retracement. And as you can see, during the retracement, price finally got to the starting point and showed a bearish engulfing. This signifies that market is truly on its way back to the downtrend, and after price has broken through all these levels to the downside, we can take our trade, putting our stop loss just above the line, just above the resistance, the speed resistance line. The first one, this is where we put our stop loss just above. Remember, you can put your stop loss above the next speed line. So to accommodate for price fluctuation, I'll put it above the first line. Then you project your take profit to 1:2, a fixed risk to reward, or you go to the next swing high, as the case may be. This trading strategy can actually be combined with other indicators to enhance the reliability of your trading decision. You can combine your speed resistance line with other indicators such as your RSI or your MACD. You can also look for divergence between price action and this indicator at the speed line levels to confirm your trading signal. So this is basically everything you need to know about the speed resistance line. Alright traders, we have come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, do not forget to like, subscribe, and turn on the notification bell so that you will never miss out on more trading tips and strategies. Thank you for watching, and I will see you in the next video.